Mahalo for joining us for first-time home buying strategies for Hawaii. Today we'll cover financial, real estate, and insurance strategies to prepare prospective homeowners for entering the market. We have with us today Daniel Costigan, Vice President and Sales Manager from First Hawaiian Bank, Aaron Tangonan, Realtor Associate from List Sotheby's International Realty, and Walter Maltaire, Sales Program Associate from Island Insurance. I'd like to thank everyone for being here today and say that today's session would not be possible without the support of First Hawaiian Bank, who have been making the dream of owning a home a reality for so many. I would like to share a message from our sponsor before we get started with the questions.
You live life on the go, and now so does your mortgage application with FHB Digital. It's easy and fast, with features that gather your documents or make it simple to upload them yourself. FHB Digital provides personalized mortgage options to suit your budget. And if you have questions, just ask a loan officer. FHB Digital. Bank at the speed of your life with First Hawaiian Bank.
Thank you so much. And I think we can just dive right into the questions here. Daniel, can you define for us what a first-time home buyer is? How do you define first-time home buyer?
Thanks, Caroline, and thanks for having me today. General industry standard for defining a first-time home buyer is anyone who hasn't owned a home in the last 3 years. There are benefits on the loan side to being a first-time home buyer. These can vary from discounted closing costs, low down payment options, and even the waiver of monthly mortgage insurance. Since every lending institution has different requirements or different specials, I would recommend looking for a lender that does have discounts for first-time home buyers, as it'll really help you get into your home early in the process.
Thank you so much. Now, Aaron, from a real estate perspective, do you define first-time home buyer in the same way?
Yes, Daniel did a great job explaining that and hit on every detail. There are some other benefits too with regard to first-time homebuyer options. Some of the reserved housing and affordable housing options that are coming into today's marketplace have guidelines set to match what Daniel said, not have owned real estate in the last 3 years, but also if you might own property with your parents, for example, but have less than 50% ownership in that property, you can still qualify as a first-time buyer into those affordable and reserved housing project options as well.
That is good to know, especially in the multi-generational housing environment that we're in here in Hawaii. So, Walter, I want to ask you the same question as far as insurance. Are there benefits to being defined as a first-time home buyer?
Hi, Carolyn. Thanks for the question. When it comes to insurance, I strongly suggest that customers go out there and do their research, just take a look at different companies. Companies are going to pretty much offer you the same type of policy for your home, but they are going to offer differing discounts based on the customer. So it really does benefit them to talk to these different companies just to see what other discounts are out there that can benefit them and help them bring down the premium. Another thing they may want to consider as well is bundling their home and auto together to also as an additional discount to help bring down the premium for themselves.
Thank you. So really shopping around is vital when it comes to insurance and first-time homebuyer discounts. So Daniel, do you need to secure financing before you start looking for your first home?
Great question. I think getting pre-qualified is the best first step in the house hunting process. Going through the pre-qualification process will let you know your maximum amount, but it'll also allow a lender to provide you accurate numbers for monthly payment, down payment, or any closing costs. Both of those will help ensure you're shopping in the correct price range. I know it's not as fun as house hunting, but it's really important and it will really help your house hunting experience. So best to start this prior to the house hunting process.
Thank you. And I mean, Aaron, would you add anything to that? Obviously, you're the realtor and people are going to be shopping for their homes with you. How important is it to really secure financing in advance?
Well, I think securing financing in advance is really the key first step. It not only allows you to know what budget to shop in, but when we present our offers, we know exactly how much down payment you have. We know your flexibility with adding more cash to the transaction if the appraisal falls short. So Daniel will do a good job on qualifying you, verifying your assets, verifying the cash available you have, and really put you in a comfortable range so that we can compete in today's market. Because we're seeing a lot of multiple offer situations where a lot of buyers are competing for the same property. And you really need to structure your financial section of your contract to be appealing to the seller.
No, it's great to know because it is such an aggressive environment now. So you touched a little bit on down payment, and I just want to ask Daniel, how much of a down payment should a first-time home buyer expect to have?
You know, one of the biggest misconceptions about purchasing a home is that you need a 20% down payment. You know, if you have it, that's great. But if you don't, there are a lot of lower down payment options available. USDA and VA loan programs allow zero down. Conventional financing can go as little as 3% down. So there are low down payment options available. Of course, the less you put down, the higher your mortgage payment. So it is a balancing act. But I would recommend talking to a lender, starting the process, and seeing what best fits your scenario. Too often, people are waiting to save the 20% and they miss an opportunity to purchase.
Thank you so much. Aaron, would you agree with what Daniel said? What are you seeing as far as down payment coming in?
I absolutely agree with Daniel. Down payment requirements have become a little less stringent, but when it comes to presenting your offer competitively, sellers like to see that you have more cash to bring to the transaction. They may feel that you're a stronger buyer because you're financially stable. But we always encourage our sellers to look at the total package of the offer, not just the financing piece, because some people may make a lot of money and still be comfortable in the range, but just not have the down payment available to bring to the transaction.
That's a great point. And so I have my down payment, I've secured my financing. How should a prospective owner determine which type of home to buy? A single family home, a condo? And Aaron, I'm going to throw that your way.
Okay, so that is a great question on deciding what to buy in today's market. There are a lot of options, but as prices go up and as interest rates start to creep up, those options start to become limited. So I always go back to asking the question, why are you buying? What is it that you want from this property or from the home that you're going to live in? And really that answer to that question is going to determine what we look for. So some people want a yard, some people want just a condo they can lock up and go on vacation and feel secure about no one breaking in. So those are the types of things that we look at to determine what their lifestyle is going to be and what they envision their lifestyle to be as they enjoy the home. And it could be other things like the neighborhood they want to be in, school districts, convenience to shops, restaurants, and entertainment. So all of that comes into play when deciding where to buy. Well, first of all, why to buy, where to buy, and then what we are buying.
No, that's great. Daniel, from a financing perspective, I mean, does it come into play whether someone is purchasing a single family home or a condo?
Yeah, so similar to what Aaron said, it's really the buyer's personal preference, so there are a lot of options available to them. What we try to do on the lending side is present those options to them so they can make an informed decision. Things like HOA fees, maintenance of the property, and even just purchase price and down payment requirements. Those will all vary between a single family home and a condominium. So we like to sit down with our buyers, go over the different options with them, and just give them all of the information they need so they can make an informed decision.
Thank you. Now, Walter, insurance is something that people don't necessarily think about until they actually need it. But for a first-time home buyer trying to make that decision between a single-family home and a condo, what additional information can you offer?
So when it comes to single-family homes or condos, there are two main policies that customers are going to come in contact with. So the first one is an HO3 policy, which is an owner-occupied single-family home. And then the second one is an HO6 policy, which is a owner-occupied condo unit. There are these two other policies which are dwelling policies, but those are for tenant-occupied, and we won't get into that today. But when it comes to HO3, you're mainly getting the insurance for the structure, other structures on the property, your personal property, and also loss of use if the home is unlivable due to a claim. For the HO6, it's more for the interior of the unit itself, your personal property, and the loss of use. One other difference too is with the homeowners, the HO3, the dwelling coverage is based off of a dollar amount per square foot, and then the other remaining coverages are percentages of those of that dwelling coverage. And then for the HO6, the customer does have the flexibility, the freedom to choose the limit that they're comfortable with in insuring their condo unit.
That's great. Thank you for that. I think the fun part, we're here. I want to ask Aaron, what is a features list and how does this play a role in the house hunting process? And what are homeowners looking for right now in Hawaii?
Oh, so a features list is actually pretty important. It tells us where we should be looking and what we should be looking for when buying your home. So features such as granite countertops, spacious living rooms, vaulted ceilings, maybe even a big enough yard to have your dog roam around or your children to play in, or your future children to play in if you're a young first-time homebuyer. But those features really will help us determine if you're looking for something new, if you're looking for something that needs some renovation. And then we go into actually looking at the property. But in today's market, there are a lot of features that we may have only found in high-end luxury condos before, such as the amenities of a fitness center, a barbecue space, pool and jacuzzi, you name it, movie theater room, and now it's dog parks. So with people loving their dogs, they're staying at home, they love their pets, and spending more time there, they need a space to escape. They need a place to walk out and get some fresh air. And the dog park feature has become, I think, a little more standard of a feature to what we're seeing in today's new condo projects, and that's become a popular one. So, matching your lifestyle with those features is important because you're going to be living in the home and in the neighborhood, hopefully for many years.
No, that is very, very true. I'm sure that open spaces and just a little bit of freedom from your four walls is something that's truly, truly valued after all of these months. So I do want to throw it back to Daniel and just ask, how do property taxes and insurance play a role really in affordability?
So we do factor property taxes and insurance into the qualifying. So the higher the taxes or the higher the insurance, the less you'll qualify for. So those are factored in. However, between property A and property B, you don't see taxes and insurance fluctuate too much. I would say the larger effect would be maintenance fees when you're buying within a condo. So building A and building B might have drastically different maintenance fees, and that does affect the affordability. So it's important to relay onto your lender what exactly you're looking at. Is it a single family home? Is it a condo? If it's a condo, what are the estimated maintenance fees? Because all of these will be factored into your pre-qualification.
Thank you. And Walter, I'm going to throw it your way, actually, because part of this is insurance. So how do property taxes and insurance play a role in, I guess, insurance affordability?
So when it comes to property taxes, everything is, you're going to be paying month to month for your insurance, or if you choose to pay a lump sum. So when it comes to your budget, it's important for you to know what your insurance is going to cost you for the year. So that way you can make a better decision on which house you're going to buy or how you're going to afford the insurance, because it can be expensive. With the more square footage, bigger home, it does get expensive. So it's good to know, it's good for the customer to know what they can expect for the year and maybe the few years to come.
Now, I'm going to stay with you on this, and I want to ask, when in the process should a person begin to secure homeowners insurance?
So I would suggest for customers or for the audience, when they know or they have an idea of, even if it's 3 homes that you're looking at, and maybe insurance is the deciding factor, or you're trying to budget for these 3 homes, that's when you should call an agent and see what the premium is going to be for that insurance for those 3 homes. And the sooner the better. I know agents can whip up the quotes, as fast as possible, but when it's only a few days, it's harder to get that out to the lender and get everything going. So the sooner the better. As soon as you know what kind of house you're looking at or which home, the address, then just start searching. Give us a call, give insurance companies a call, and start your research and your quoting process.
Thank you for that. Now, I have my financing. I'm all set. I'm ready to go. I've done my research. What is the best way to find a real estate agent? And what does the real experience of shopping for a home look like today? And that's for Aaron.
All right. So ways to find a real estate agent have become easier over the years. Before it was a referral from your friends or your family based on an experience that they've had with that realtor. The same way we look for other vendors, contractors, painters for our homes and things like that. We always look for recommendations. But now with the invention of social media, Instagram, Snapchat, TikTok, even, I don't know who goes on Facebook anymore, but that was a big thing when it first came out. What you see is you get a more of a personality basis of these realtor and real estate agents. You can also see the knowledge that they have, that they're sharing. How are they engaging with comments and people who are asking questions? And I think in that arena is where we're headed, and people shopping for a realtor, they want to see properties virtually, and they want to see realtors walking through homes at the comfort of in their own home and on their phones or wherever they may be. So it's moving really to a technology-based search process. But taking that and then translating it into your true experience of shopping for a home and what that looks like could be different. Some people might be doing it for show on their Instagram pages. So when you start shopping out in the real world and touching and feeling homes and properties, you'll know the experience of the realtor. How knowledgeable are they? What value are they adding to the neighborhood that you didn't know about, for example? What can they tell you that you can't research on your own? And a lot of that is market trends, how to strategize your offer to get it accepted, and what the market is doing in the space at the time that you're searching for your home. So all of those things enhance the process after you initially engage and reach out to the prospective realtor that you want to use in social media or through word of mouth referrals.
Thank you for that. Now, I do want to say one of the questions that we get at Hawaii Home and Remodeling all the time is, well, should I buy a new home or should I just go with a fixer-upper? And I am going to start with Daniel on that one. So I come to you and I say, hey, should I buy a fixer-upper or should I hold out and buy a new home?
That's a really good question and a really tough one as well. A brand new home has its obvious advantages. It's brand new, it's move-in ready. You can bring your toothbrush and you're all set to go. A fixer-upper will require more work, but there could be a lot of advantages. There could be some price advantages, but also it gives you the ability to customize your home. From our perspective as a lender, there are some differences when you're financing a new home versus a fixer-upper. And depending on the scope of the project, so how much you're fixing up, that could affect your financing options. So my recommendation would be, if you're looking at something along those lines, talk with your lender, explain what you're trying to do, go over the scope of the project, and that'll really allow them to explain the full nuts and bolts of the whole process.
Thank you. And I do want to turn that over to actually Walter next. And we did spend some time talking yesterday, and you used a claim waiting to happen phrase yesterday that I loved. So, someone is considering buying a fixer-upper versus a new home. What advice from an insurance perspective can you share?
Yeah, sure. So, when it comes to older homes, and like you said, some of these homes can be claims waiting to happen. Just because of the age of the home, if the roof is deteriorated, hasn't been replaced since the home was built in 1949, if the plumbing or the electrical hasn't been replaced or upgraded. There's something called knob and tube, which is an old style of electrical, and those can cause more problems than they're worth. And so that's, like Aaron said earlier with the home inspection, that's good to know. The inspector will find that out for you. So when it comes to the difference between a fixer-upper or a new home, I would suggest go with the new home. I mean, that everything's going to be up to code. That everything is going to be done the right way. There aren't going to be too many things you're going to have to worry about in regards to a claim happening. Because the worst thing that could happen is you could buy the home today, and you could have to file a claim tomorrow, and the insurance company is going to want to make sure that they keep their risk low. So that's also something that customers, the audience, is going to want to consider.
Thank you. Thank you. Now, obviously, this comes into play when we're shopping for houses. Maybe someone's going to come to you, Aaron, and say, well, I really want something, a fixer-upper, because I just love doing all of that work on a house. I mean, how do you kind of make the person go one direction or the other? How do you build that, pros and cons list for them?
Yeah. So finding the pros and cons really is key into deciding whether you want a fixer-upper or not. And as you said, there is a lot of work that goes into it. There are some financing options, though, where you can finance some of those renovation costs and construction costs into your loan. So again, check with your lender about that. But it all kind of goes back to the why are you buying? If you love the neighborhood, if you grew up there and that's the only place you want to be, and now you find this great home with good bones that you just want to renovate or restore, and you have the experience, the expertise, and the money to do it, I'd say go for it. You already know you want to be there, and you know that you'll enjoy bringing the fruits of your labor of picking out the swatch colors and countertops, cabinet styles, all of that. You get to choose all of it and make it custom for yourself. So people do get a lot of enjoyment after doing that. So if that is why you want to do it, then definitely go for it.
I love it. I love the response. So I did want to touch a little bit, though, on home inspections. And I'm going to stay with you, actually, Aaron. How important are home inspections, and what is the seller actually obligated to disclose?
Those are two great questions. Home inspections are very important. We encourage all of our home buyers to hire a professional home inspector for the specific reason of inspecting real estate. And the way they inspect could be different from a contractor friend or a family member that's a contractor in the way that they approach the inspection. So what inspectors normally look for are electrical, plumbing, structural, and appliance issues. And I'll give you a really good story of an experience where the home inspector, they check the temperature of the range and the oven and the refrigerator and freezer, make sure they're operating at the proper temperatures. So that'll tell you whether you need a new one sooner than later. But this home inspector had a thermal scanner and actually scanned the walls, found some moisture in there that we didn't see with our naked eye. The wall wasn't soft and there was no bubbling, but he did find moisture, and come to find out that there was a drain pipe from the roof of the low-rise condo that went 2 stories up all the way down to the ground floor and was causing a slow leak in the walls of 3 units. So the association had to go in and cut the wall, replace the whole pipe, and that saved a lot of headache. So hiring a home inspector, they check everything for you. They give you recommendations and can tell you what are maintenance items what should be replaced or addressed immediately, and what you can kind of live with and look for replacing or repairing down the road. Now, when it comes to what things a seller should disclose, we usually try to get that disclosure before we do our home inspection. So the seller's obligated to give us what is called a seller's disclosure statement, and it's about 100 questions, and it's very, very detailed, down to, is there excessive noise from planes flying over? I mean, they go way into detail in the questionnaire. Sometimes the seller may know, sometimes they don't know if they haven't lived in the property for many years, but they should disclose what they repaired or replaced, what defects that they know about, and any improvements that they've made on the property. So that will help the home inspector look at the statement and address some of the concerns that were listed on the seller's disclosure statement. So they kind of work hand in hand, and it is a crucial step in deciding whether you want to move forward with the purchase, or if it's a project that's too much for you to handle and you want to cancel and look for something else.
No, thank you for that answer. I mean, it was very, very thorough. It seems like the inspection really does complement the whole closing statement process. Now, I have my loan. I found my ideal place. I got the home inspection, but I have no idea what these terms are. What are closing costs and what is escrow? And I'm going to start with Daniel on that one.
So, I think most home buyers are aware that a down payment is required, but closing costs can oftentimes catch them off guard. So closing costs are costs incurred to get your purchase closed. So lenders will have closing costs such as a processing fee or maybe an underwriting fee, but there's also some other third-party costs. So those would be things like an appraisal. We order an appraisal on the property to determine the property value. There will also be some other third-party fees like title insurance and escrow. So title insurance ensures you get clear title to the property, and then escrow is a neutral third party between the buyer and the seller. On average, closing costs will average about 1.5% of your loan amount. You can also pay points to lower your interest rate. So 1 point would be 1% of your loan amount, and that may roughly lower your interest rate 0.25%. So on average, closing costs could be in that 1.5% to 3.5% range, depending on if you pay points or not. Another term you hear a lot is we're in escrow. So what that means is the buyer and the seller have agreed on a purchase price, and they are going through the process of closing that transaction. So in Hawaii, and actually Aaron can probably comment on this a little more, but in Hawaii, the normal escrow is about 45 days, and that gives the buyer the time to do their home inspection, get their loan squared away, gives the seller time to make their arrangements as well.
Yes, Aaron, can you actually elaborate? Because Hawaii is a little different from the mainland when it does come to escrow and title companies. Could you elaborate a little bit?
Sure, I'd love to. There are some differences between the mainland and Hawaii on title insurance companies and escrow companies. So here in Hawaii, traditionally, or most commonly, we find the title insurance company within the escrow company working together as one entity. On the mainland, sometimes you have escrow companies who only facilitate the transaction. And so they're a neutral third party, as Daniel mentioned, and they facilitate the document signing, they hold the deposits from the buyer, and they disperse all the money to the seller at the end. Title insurance company is just that. It's an insurance company that provides you security for the lifetime of ownership of the property, to say that no one else in the future can claim the property from you. So, for example, if you buy a property, the title insurance company has to do research to make sure that title and the deed is free and clear, that the seller who is selling it and signing the documents are truly the seller and the correct person. Most commonly found in trust, to make sure that the trustee who's signing is the proper successor trustee. But in the mainland, those are two separate entities a lot of times. So here it's a little bit different. They do work as one entity, which actually helps facilitate the transaction a lot smoother.
Thank you. And it really shows, how much expertise you really need to have in this market because it is so different from other markets. Now, as far as homeowners insurance being included in closing costs, how much is a typical homeowner paying? Can you answer that for us, Walter?
So typically for an HO3, for a smaller home, you could be looking at about maybe 500 for the premium per year. If you're including now hurricane policy as well, that'll increase it by about 1,000 to about maybe 1,500 depending. Now, when it comes to an HO6, which is the condo owner's policy, since the owner can choose the limit amount that they're comfortable with on the policy, it can range. It can range between, lowest I've seen is about 250 to about high side of 4 to 5. So it's something to consider.
Thank you. Now, we did touch a little bit on how owning a home here is a little different, but I do want to pinpoint some things maybe to consider on the insurance front. What is included in a typical homeowner's insurance policy, and what other lines of insurance should a prospective homeowner consider?
So typically your, normal damages that you'll see if a pipe bursts and causes damage inside your home, a small leak, like Aaron, mentioned earlier, although that was an AOAO, that kind of stuff would usually be covered under an HO3, HO6. What people should be considering is hurricane damage or hurricane policy, flood, especially with all the rain that we've been having now, flood, and then earth movement or earthquake. So those three perils are normally not covered under your normal HO3 or HO6 policies. So you can purchase a separate hurricane policy with Island Insurance. We do hurricane in-house as well as use a third party called Palomar. For flood insurance, there's a national program, and with Island Insurance, we can also help you with that. But in regards to any kind of earth movement or earthquake, there aren't any policies that I'm aware of that are going to cover for your earth movement or earthquake. Normally, the policy is going to cover for the house, the structure. The policy isn't going to cover for the land that is damaged.
No, and those are all good things to really remember and to know. So I'm all set. Like, I know everything. I need to get my pre-qualified status going. So what are all the documents and things that I need to pull together? And this question's for Daniel.
So I know it's never fun gathering the documents, but it is a very important step in the process and best done sooner than later. The most common documents we'll ask for are 1 month of pay stubs, 2 years of federal tax returns with W-2s, and 2 months of complete bank statements. So I would say majority of the time that's a good starting off point. If it's a business owner, we might ask for business tax returns. So there are some additional documents that could be required, but that should cover the majority of your buyers. We also need to run a credit report. So home buyers should be prepared that we will be running a credit report as well. The importance of this, and Aaron kind of touched on it earlier today, is that we're in a really competitive market. And when you find that dream home and submit an offer on a property, the seller is going to reach out to your lender and they are going to ask, did you collect tax returns? Did you collect pay stubs? Did you run a credit report? They're going to want to know that all of this initial upfront work was done so that we don't get any surprises during the escrow process. So a lot of times when we're in a multiple offer situation, it's not always the price that dictates who gets the home. A lot of times it can be some of the terms or some of the homework that's been done ahead of time. So if we can let the seller know that you've prepared all of this, the lender has reviewed them, it'll really help you with securing that dream home.
So the pre-qualified process is really, really important if you want to find success, it sounds like. We're going to move on to the very end. We're all here virtually. And I think the question is, what are the things that we can accomplish virtually online now? I'm a first-time home buyer. I want to get pre-qualified. I want to secure my loan. I want to shop around for a real estate agent. I want to do my insurance homework. I want to buy a house. what are the things that I can accomplish virtually versus the things that I really have to do in person? And I'm actually going to start with Daniel.
Well, like many industries, the real estate industry has had to adapt to the challenges of COVID. On the lending side, gone are the days of needing to meet with your lender at their office with a large stack of papers that you brought in person. Online application systems allow customers to apply online from their laptop, tablet, their smartphone. Not only can they complete the application, they can also upload documents. They can also e-sign the majority of the disclosures. So a lot of the process, and pretty much the majority of the process, can be done remotely. Closing documents still do need to be signed in person with a notary. So that's the tail end of the transaction, and that does need to be done in person. But mobile notaries have helped with that. They can come to your home and help sign. So, a lot of changes have been made. We want to respect our customers' wishes. So the technology is there to support that. With that being said, I would say an important part of your transaction is having a loan officer that is there to speak with you and work on your wants and needs. So we can upload everything electronically, we can apply electronically, but make sure you stay in touch with your loan officer. Make sure you're conversating with them and relaying on your wants and needs there.
Now, Aaron, I'm going to throw it your way. What can I do virtually, and what are the things that I really have to do in person?
So technology has come a long way, and we've all experienced it during COVID in 2020 and trickling into 2021. And we have eliminated, as Daniel said, a lot of the need for in-person meetings and inspections even. There are instances where we did home inspections through FaceTime. The home inspectors at the property walking us through, pointing out the things they found while we are in our car or we're at home, and watching the FaceTime video as he walks us through. So normally I would say be at the home inspection in person, ask questions, touch, feel, all those things that they're pointing out. But now it seems that we can accomplish a lot of those same things and save time while we're at it through technology. And like Daniel said, there are certain things that still need to be done in person, like closing document signing with a notary. They need to verify that the person who is signing the documents is actually you. So we are, as we're moving toward the state doing electronic recordings, they're trying to narrow down that process and work out the kinks. But right now, we still need to sign those documents in person with a notary.
Thank you so much. And I do want to thank every single one of our panelists today. Daniel, Aaron, Walter, you have been wonderful, and I learned a lot, and I hope that everyone watching has learned a lot. Thank you again to First Hawaiian Bank for sponsoring first-time home buying strategies for Hawaii. If you have any questions, you can reach out to Aaron at List Sotheby's International Realty, Daniel Costigan at First Hawaiian Bank, and actually right here at the virtual home show, you can go and ask mortgage loan officers at the virtual booth questions. And I would like to also thank Walter. Reach out to him at Island Insurance with your insurance question. Mahalo for joining us today.
Thank you.
Thank you.